The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 13th. How about that? The Friday the 13th, fantastic Friday the 13th edition of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one as well as an extraordinary weekend. And the easiest way to do that, it's to start with a cold bottle of sake. But the second easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstances of the markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at about 10 past 1 in the afternoon. I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044. This is just simply fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 133 points. She's trading at 17,314. S&P is off 14 points at 2,032. NASDAQ Composite off 46, trading at 49.58. Russell 2000 is flat. How about that out there? Not participating in the move lower. So we'll certainly take a look at what's going on in the weak hands in the market. Something to think about. Gold is flat as well, but that's to be expected. She's trading at 10.80. Silver is down 2 pennies, so that's flat at 14.20. Light sweet crude off a $1.24, trading at 40.51. See a little bit of movement in natural gas. Let's take a look at that. To the upside, leading the charge today, it's Illumina. That's up $11, 7%. You've got Penumbra Inc. That's up $9, 22%. Concordia Healthcare, maybe there's some kind of buyout going on between those two. They're both up 20%. Kite Farm up $6. Springleaf Holdings up 12%. That's up $5. Leading the charge of downside, AutoZone. Taking in the shorts, it's off $22. That's down about 3%. Fossil Group, how about this move? Down $17. That's off 33%. That's a big hit. Chipotle down 2.5%, off 15. Amazon is off $14, down a couple. Ulta Salon down 12. So we've got a bunch to take a look at. But I know what you want to start off with first is what are these markets doing? So let's first begin. This is pretty unusual to see. So what the market is in the process of doing is making a bottom and making a relatively significant bottom. Why do I say that? It's not very often that we see this triple play out here. It's very difficult to see a triple play. But let's go look at our triple play setup out here. And if we take a look at the 30-minute chart for the ES Mini, and we take a look at where we're at as of this morning here. Let me get my crosshairs on the chart. You can see from the very top, at first it looked like maybe it was going to be a seventh wave move to the downside. That recycled. We've got the second seventh wave move to the downside right here. So at 11:30 this morning, what we saw a seventh wave move. That's the letter G on my screen out here. We saw a nice little hammer candle form. We saw a nice bullish engulfing candle that gave us some confirmation. And as long as that low holds throughout the rest of the day, well, holds through Monday, Sunday as well. That low is 2021.25. Then this pattern is in play out here. Oftentimes, what happens is the market, and I don't know why it does that, but it's just when a market gets stretched, that's a spot to be taking a look at market communicating to you and I that it's going to bounce. Now, you could say bounce, but If we take a look at what's going on the 2-hour chart out here, so here's the double play. If you come all the way back to the high at the close on November the 3rd, and you count those troughs on the way down, guess what? We've got that price relative strength divergent pattern in place out here. Now, this seventh wave move is really still in process here because the candle that's currently being formed doesn't complete until 2 p.m. If the low that's we just took a look at again inside the ES mini 2021-25 doesn't get taken out between now and 2 o'clock, then it will have confirmed a seventh wave. If it does take it out, then the 30-minute will go away, but the 120-minute will still be active out here. So we'll try to take a look and see what the market is doing just before I sign off the air out here. But we've got a second Stevie Wonder tune singing in the key of G out there. If we take a look at the triple play, well, the triple play is looking at the 5-hour chart, the 5-hour energy chart out here. And if we start with that same, let me get the cursor going here. If we take a look at that high, which formed a nice little price relative strength divergent top out here. And this is back on November 3rd as well. And if we count those candles to the downside, we also are in that key of G out here. Now, in this case, because of 5-hour chart, this does not complete. Now, this 5-hour candle will complete at 2, but you won't get a confirmation until the close. So if you see a close that's bad, it would be probably the 2-hour chart and the 5-hour chart that still retain their heavyweight championship of the world with that key of G. So it's not often that you see 3 time frames like this line up, but that's what we've got. Now, with regard to, I know somebody out there is saying, what, Steve-O? What about the other indices out here? If we take a look at the 5-hour chart inside the NQ out here, you'll also see that we're in that key of G move out here. All these are signals of a potential bottom, right? I can't control the market, but what we can do is you and I can go. We've seen enough of these patterns. You and I have been around the block a few times, and we have seen enough of these patterns to know that you don't ignore them. And then we take a look at what's going on inside of the Dow out here. The Dow also on a 5-hour chart in the key of G. Now, inside the Dow futures contract, I believe the 120-minute time frame as well has got a price relative strength divergent pattern, very close to a hammer candle. Was not a hammer candle out there, and it's not in the key of G on the way down, but it does have a price relative strength divergent pattern. So all of that suggests that the market, just those charts alone, suggest that the market is going to make a low. However, we can go even further. So let's go further. Let's take a look at, did I close out that chart out here? Let's see. I did. I'll just have to do it this way. Let's take a look at where we're at. Price oscillators well below 0. Let's take a look at the New York Stock Exchange. And as we know, the New York Stock Exchange, nice little island bottom pattern out here. And as Jay points out in the den, and he asks a question, we're going to go take a look at it. It's what's my take on the NQ island reversal top that's out there. You've got it either inside the indice or you also have it in the QQQ ETF series. So we're going to go take a look at that because that could be, you know, a damper on the party. Now, the cool thing about that, the cool thing about both those island reversals, let's talk about the New York Stock Exchange first. If the September 29th low gets taken out, it spells curtains for the market. Now, September 29th happens to be the low of the candle session inside that island reversal. I'm really not that interested in the August 24th lows. You know, that was like a one-hit wonder, and I'm more focused on the September 29th low. If that low gets taken out, then there's nothing more bearish than a failed bullish pattern. In this case here, the island reversal bottom. So it's at September 29th low that we have to watch, 95.65. Just like inside the NDX 100 and the QQQ, all you have to do is take a look at the highs out there. If those highs get taken out, they tell you that this market's going to motor on higher. So we've got really both sides of the trade out here. Which one's going to win, I don't know. What the markets are communicating to you and I is they're ready for a pause, a bounce, a bottom. I don't know which of those three, but it's definitely one of those three. The market is not set up to continue motoring along lower. If we take a look at the bottom panel of my screen out here, we take a look at that price oscillator, you're down below the 150 level. Last time that we were down at the 150 level, minus 150, was very close. It was minus 144 on September 28th. Was that September 29th bottom? Yeah, it was the day before. Okay. But there was a the key here is that when you get down to these levels, it's where bottoms form. Now, back on August 24th, on that one-day swoosh, that Nike swoosh to the downside, we saw a reading of minus 337. That was extremely oversold, just like we're in an extremely oversold position right now inside of the New York Stock Exchange. You can go take a look at, the New York Stock Exchange is going to give you the better signal in the market, right? Because of the market swath out here. If you take a look at July 27th, and you look at that low out there inside its price oscillator, minus 183. There, I'll move this down here a little bit easier for you to see. What did it do? Hey, at least found a bottom that sent price really close to back up towards the July 16th high out there. So that was at least bottom worthy or bounce worthy. Same pattern on June the 9th out here when you got down to a reading of minus 188. By the way, the reading right now as we speak is minus 187. So if you go back to that minus 188 reading, we ended up with a bounce for, 5, 6, 7, 8, 2, 4, 6, 7, 8, 9. Looks like about 2 weeks out there. If you come back into the time period here of March of 2015, you get a reading of minus 191. What did the market do? The market went ahead and bounced. So you see, it's not my opinion. It is just simply looking at some simple indicators and taking a look at their pattern behavior. And there was way more fear in the market back on August 24th and September 29th. I think there is than there is today. And it doesn't really matter whether there is or there isn't. The point is that, the market is nothing more than a rubber band. And that rubber band can get stretched, and it can get too stretched out here. So we can go back and continue to go back, but I don't want to waste your time doing that. The point is the market inside the New York Stock Exchange is in that level where you see a bounce. Now, inside the Dow, you've got the same thing out here. Inside of the Dow, it's down to a minus reading of minus 3.3. You get down below minus 2.5. That's where bounces can occur as well. If we go take a look at, so now let's look at the, let's do this. Let's switch over and try to answer the question, what do I think about the NDX island reversal? So let's take a look at it. We're going to look at actually a couple different things. Let's look at it because I've got a couple emails here that say, Steve, could I talk about the death cross? And the 200-day, which is the death cross is where the 50-day simple moving average. You and I don't like to do things too simple, but in this case we have to. It's where the 50-day simple moving average crosses below the 200-day moving average. So this is going to be interesting here for us to take a look at. Here's what I want to do. I've got the New York Stock Exchange up here, but we're going to put up the NDX 100. So let's do that. That means I've got to go back a little bit further in my charts to get this line, because this is going to be an interesting session. Now, we can't complete this. We're going to go to break here in about 20 seconds or so. But when we get back, hey, for those of you that have the chart systems out there, go do the same thing that I am. Go pull up the NDX 100, or if you can't pull up the index, go pull up the QQQ. Put the 50-day simple moving average. Put the 50-day or the 200-day simple moving average as well. Get those lines on your screen out here. That way you can follow along at home. And that way you can come back and you can look at the work and you can say, aha, that's pretty interesting. Because the two are kissing. The question is, are they going to make up? Are they going to make up? Because right now they're kissing, even with the move back this morning, this afternoon. Steve Rhodes with TFNN. I'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's off 140, S&P's off 15. Welcome back, folks. Now, we were going to take a look at the NDX 100, so hopefully you've got your charts up on the screen. Now, what I've got on my chart out here, the two things that we're going to take a look at, that way it covers the requests. I see there's some additional that have come in here, so we'll go try to figure out what those are. But we're going to take a look at really two competing patterns out here. Now, we're going to take a look at both sides of the trade as well. So we've already taken a look at what's going on inside the futures contract, potential bottoming patterns out there. It's all about really whether or not there's any bullish reversal signals. A 30-minute had that hammer candle out there, so we have one signal at this stage of the game. But inside the NDX 100 this morning, as it opened, what it did was it gapped down below yesterday's low. The low of yesterday was 45.8808. The high so far of the day is 45.75.80. So what we've got here is we've got a small little gap, what about $13 or so, but small when you take a look at it on your chart. Now, of course, that didn't alone just create the island. The island was created on that breakout session of October the 23rd. Wide-ranging bar, but in this case here was a gap up. So that low of that candle session on the trading day of October 23rd was 45.9874. So there is our gap. There is our island top reversal, in essence, at all-time highs. It is an extremely bearish pattern out there. So it's extremely bearish. You say, well, if that's the case, and I can't let that just be the controlling factor. It may turn out to be the controlling factor. And you can say, he's all washed up. He doesn't know what in the heck he's talking about out here. But I'm not just going to let one pattern in any event really control the situation out here. You and I just took a look at what went on inside the New York Stock Exchange and bounces. So if this gap gets filled at all, then that island bottom, the island pattern just simply goes away because the gap will have been filled out here. If the highs get taken out, to me, there would be nothing more bullish than that. I don't know if that's what's going to occur. What I do know is we're inside the gap right now. And it's very possible that the NDX 100 will get down to the breakout area. It doesn't have to get all the way down there, but it could get down to 45.0470. We'll go take a look at the Qs and see what kind of volume we have inside the Qs. Remember, if we got a lot of volume inside the Qs today, that's another mark of a bottom, not a market that actually wants to move lower. I don't know what the volume is as we speak at 130. So that's the bearish pattern out here, is that you've got an island top in the indice that has been the leader all the way. In fact, if we take a look at, if I do that, I'll do that over here, just to give you a feel for where we're at inside these markets. Let's take a look at where we're at for the year out here. And you're going to see that the NDX 100, so this is a yearly chart that we're looking at. The NDX 100 is the only one that's had any performance, because if we look at that versus take a look at the S&P 500, here's the S&P, you can see that we basically have gone nowhere. In fact, we're a few points underneath the open out here. Last time we had this style candle was back in 2011. And if we go take a look at a correlation between this year in 2011, it actually says, hey, that island top out there, maybe, Steve-O, you ought to pay it a little bit more respect because the market could have further to go to the downside. When those other patterns fail, you get taken out, then we'll go take a look at the meaning of that. But let's go back here. So we've got that's the island top that's out there. But what we also have, what's kind of interesting, because this is like a little bit of a do or die. Prior to today, we were the NDX 100, and this is a daily chart that you and I are looking at, was getting ready to make the golden cross, not the death cross. Now, the death cross is where the 50-day simple moving average crosses below the 200-day. Now, what's so odd is that they've given that the name of the death cross, and quite frankly, on that day or shortly thereafter, within about a week, what the market actually does is it finds a bottom. So most of the damage has been done when the so-called death cross actually occurs out here. Now, the death cross inside of the, just to show you the pattern out here, if you take a look at the NDX 100 and you take a look at September 29th, out here, September 30th, that's when you actually saw a death cross inside of the NDX 100. And of course, what you and I know is that was a significant bottom. Market went on, made it A to B equals CD to the upside out there. Now, what we almost had, we don't have, it doesn't mean that you can't get it on. And if we get it on Monday, we get it on Tuesday, we get it on Wednesday, maybe we don't get it all, because this could also be a deflection point. So on the bearish side, you've got the island top. On the bearish side, you've got the kiss and maybe not make up session that is going on. And in fact, if the 50-day simple moving average just simply continues to deflect lower, that's a bad scene. Why do I say that's a bad scene? As well as if it crosses back above it, that's a very positive scene out here. So we're going to pay more attention to that than you and I are going to pay attention to where price is traveling, you know, above or below one of the moving averages out there. If you take a look at the last time that we had a golden cross out here, that, as you know, for those of you playing the home game, took place right around January 24, 2013. Market never looked back from that stage. You can see that other death cross that took place out here on December 13th, only lasted really for a few days. So we get back, let's go a little bit further back in history, take a look at the NDX 100. Let's look at some more golden and death crosses. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 132, S&P down 13. So back to the death and golden cross out here. And it's really the golden cross that I want you to focus more on, because what you're going to is probably, that's bad language to say moron. You know, it's the two words out here. But I'm the moron. But I want you to focus more on the golden cross out here. And as we take a look at both the death and the golden cross, we ended back in 2012. Now, I just put up the yearly chart for you. We took a look at the S&P 500 as well as the NDX, and we saw that the similarity between 2015 is very similar to 2011. So now we're back at 2011 when we had the death cross that occurred back in August, similar to where we're at right now in 2015. This is why it's really important, why we've got that little kiss and tell show that's going on today, maybe going on for a while. Maybe it's a deflection, I don't know. But at this stage here, the death cross took place back around August 18th. Of course, on August 18th, that basically was the bottom. Remember how the death cross, in fact, occurs. It's not the sign of, it can be, but it's typically not the sign of really bad things. It's the sign of a pause inside the market. Then you really wait for the golden cross, and then things take off. Now, remember, our market made a little bit lower low on September 29th, a higher low on September 29th, and really so did the back in 2011, happened to be October 4th, and then the market took off topside. In the case of the NDX, it got all the way back up to its highs from July of 2011, its most recent highs, not its all-time highs like it has now. But that's really the pattern that was in play. But here's the golden cross that took place. So if you take fast forward to back on December the 8th, 2011 to where we're at right now, yeah, it was December 8th or the day after. Could have been December the 12th. I guess I can look at it in the bottom right-hand portion of my screen and give you the exact day. 22.9. It was December the 8th. So December the 8th was when you had the golden cross. And you can see price had already been above the 200-day simple moving average. It fell back below it. A lot of people have called that kind of like doomsday-ish. And you can just take a look at it on my screen. It doesn't really mean a whole hill of a lot of beans out here. What means a lot is whether or not we continue to see a deflection or whether or not we actually get a crossover. If you get a crossover inside of the, that's how I would read the these two moving averages. You get that golden cross, which leads to higher price. That says that the island top that's out there likely goes away. And if you come back here, you know, last time we saw another golden cross before there was in 2010, market went ahead and took off topside. Here's your death cross back on July 16th or so in 2010. Of course, the price gets above the 200, gets back below, you know, similar to where we're at in some of the markets. That didn't spell doomsday out here. It's really the crossing of these two moving averages out here that are really key. Here's another golden cross, takes place back in June of 2009. You already know what occurred there. Now, let's take a look at on the real negative side. So let's take a look at the kiss and tell scenario. So the kiss and tell, when you take a look at what occurred back in 2007, the death cross didn't occur until February. Now, let me move this here so I give you the exact day out there. 1996, 92. So it took place on February 1st. So on February 1st of 2008, that's when you actually got your death cross. It was only, you know, the market basically moved sideways, slightly lower for a period of until March of that year. Prices get above the 200-day exponential simple moving average, really fall back below. But here's that inflection point, June 27th. June 25th, as a matter of fact. You had the 50-day at 1962.50, the 200-day at 1962.05. So actually it was just a slight cross below, but we're going to call it as a kiss and tell throughout here. And then the gosh darn thing went ahead and deflected lower. So on the bearish side, you can take that island top that's out there. The bearish side would be not until you get that positive cross, 50-day simple, crossing above the 200-day simple. Is the market really out of the woods and wants to celebrate and move to higher price out here? So we're at a point in time, doesn't have to be today on Friday the 13th out here, but you can see how important, in essence, really the golden cross is more important than the death cross. Here's a one before that back in 2006. Market goes ahead and and when I say one, I'm referring to the golden cross, takes off to the upside out here. Here's your bearish death cross, you know, turned out to be not that big of a deal back in 2006. Another golden cross out here. Market takes off topside. This is back in 2005. You kind of get the picture. We have enough examples of when we get these golden crosses that the market just simply moves higher. Here's back in 2004, and I won't bore you anymore. Here's a golden cross back in the 2003 timeframe out there. So it's not necessarily just today, but you can see we're in that kiss and tell scenario out here. This is the one that we want to keep track of because it has been the leader to the upside out here. We don't have that same kind of kiss and tell going on, not even inside the NASDAQ composite, the bigger indice out here. So it's a ways away from that taking place. So we don't have it really anywhere else that I can see out here. If you take a look at the Dow as an example, we're quite a ways away. INDU, we're quite a ways away from seeing any kind of a golden cross out here. But since it's all about the strong indice, and let's take the Russell 2000, right? That's looking pretty strong today. Let's go take a look at it in a moment. But you can see nowhere near any kind of golden cross here as well. But let's go take a look at the Russell, get a feel for what's going on. So hopefully that really assists you with regard to price and moving averages and maybe a tool, not maybe, a tool that you can definitely use out there. And that way you don't have to get so scared when you see that death cross. If you're short the market, you know to really be tightening up your stop, because that can either mark a signal of a bottom or, things might grab just move slightly lower to lower prices out here. The kiss and tell, that's a whole different scenario out here. Now, if we go take a look at the ETF structures, let's do that. Let me get I don't have this open, so let me try to open up my spreadsheet. Needed to reboot everything before I came on the air, so I was just glad to be able to get on the air. We've done volume inside of the IWM, so we'll take a look at all the volume metrics out here, see if we can get a feel for what's going on. IWM has done 27.9 million shares. We've been trading for, about 4 hours now? At 1:30, that says it's going to do about 45 million shares. So let's go take a look at the IWM, see what it's doing, what it's going back against out here. So at this stage, we have, maybe a doji high wave-ish style candle. The IWM broke out with 65 million shares back on the trading day of October the 28th. So prices now come back to the breakout area inside the IWM with light volume, 45 million shares out there. It hasn't tested the other breakout area from October 5th. That has 45 million shares. The top of that is a price point of 113.45. So the IWM pulling back into a breakout area with light volume. Let's see if we've got any TAS profiles out here worth paying attention to. No, when I say worth paying attention to, there's no signs of support because the daily price point of the IWM is below both the daily and weekly boxes out there. But prices move back into a breakout area on light volume. Let's go take a look at the Qs. See what the Qs are doing out here. Now, in the case of the Qs, the volume so far, 28.5 million. So 28.5 equates to about 46 million shares. So inside the Qs, they broke out with 53 million shares. So unless volume gets that giddy up and go out here, it's pulling back into the area where it broke out with lighter volume. Now, what we don't have is we don't have a test of the top of the gap, so we're kind of in mid-stroke out here. And maybe those other Gs that we took a look at, or the shorter one on the 30-minute, maybe those fail. But the 2-hour chart, the 5-hour chart, remember that's going to potentially carry over into Sunday night, Monday morning out here. So the Qs, I could make the case the Qs get back and test the 109.71 level. And I don't know if volume continues at this pace, accelerates, what it does. But this stage here, straight line math says that it's a lighter volume. Let's take a look at the SPY, see what the SPY is doing out here. SPY has done volume of 87.1. That gives us about 141 million shares out here. Now, what the SPYs did yesterday, they had broken out. Well, what the SPY did yesterday in its chart, the breakout was 144 million shares, and it pulled back below that and closed that gap with 121. So the breakout area is really the bottom of this candle session here. The bottom of the candle session being the trade day of October the 22nd. So 201.85 could easily be the target. But I would say that the likely target out here was the following. And if we take a look at that, that's the September 17th high. And that was my target all along. We closed, as I mentioned to you, we closed out our short positions inside the newsletter yesterday. But when we originally got in the trade, my target was the September 17th high. That is 202.89. The actual low that we've seen today is 202.88. Man. And I'm really not that good out there, but how about that? So, in my opinion, now the volume on that September 17th day, 276 million shares. So you had 276. Today you're going to do about 141. That combined with everything else that we're looking at, it's just screaming bounce or bottom. I don't know which one it is. I do know if we see the NDX or the Qs. In fact, on the Qs here, it should be the same. Let me just come over here to the death cross and put up QQQ ETF here. This has already got everything. Yeah, you can see the Qs are very close to the same thing out here with regard to the kiss and tell. Let's go back and take a look at the diamonds. We haven't looked at the diamonds. So let's go see what the DIA is doing. Volume so far today, 4 million shares. 4 million equates to about 6.5. Now, the diamonds did the same thing that the SPY did yesterday, and that it closed the gap. Volume there was 6 million shares when the breakout was 7.6. So it's really coming right back into its a breakout area, which would be the trade day of October the 22nd. So it's pulling back there at this stage of the game with light volume. I don't see the, not that the camp, I don't see the diamonds necessarily getting back into that September 17th high. But if we take a look at maybe a bullish or bearish signal, if we look at just a simple trend line out here, I think that trend line may haven't been broken. No, the trend line's not been broken out here. So you could easily make the case that it falls back even to the trend line off of the August 24th low, and then the low from October the 2nd. So that covers the indices. I think it covers it pretty well for you. If not, go ahead and post a question in the den. So we took a look at the IWM. Let's look at natural gas, up 8 pennies out here. So the case of natural gas, it has broken right back into a price channel. So that is a short-term bullish out here. Now, this is a daily chart. The price channel, when I was taking a look at this, I believe I was using a 30-minute time frame out here. Yeah, I'm pretty sure that I was. And looks like it broke back into that level with some nice volume today. So I'm not sure what the inventory numbers were, but there was probably the inventory report that came out. But whatever it was, the market responded bullish. Maybe there was a drawdown or something. Maybe somebody in the den maybe post that for me as well. That doesn't matter because what we do know is price is now broken back into this little rising price channel that it began back here on October the 30th. So we can see it formed a nice little rising price channel. It was really two competing channels that were in play here. And we can see that price broke out of it, and it's back in. It's actually testing that channel as we speak right now during this hour, and says that, hey, this thing can now rise all the way up to the top. Where is the top of that price channel? The 240-ish area, or 234 as we speak right now. So that looks pretty good. So we take a look at natural gas. Let's look at some of these stocks out here that are getting shellacked. Let's go see what's going on there. If we take a look at AutoZone, AZO is a ticker symbol off 26 bucks. I don't see what the news is behind it. We don't want the 30-minute chart. Let's take a look at the daily chart out here. So in this case of AutoZone, man, were they out with numbers? It didn't even show up on my screen out here. But this thing has a volume of 246,000 shares. So where is this headed back to? Let's actually get our profiles out, see if they can assist us with anything here, see if they're going into support. So you'd have to say AutoZone is likely targeting 719. It's at 749 as we speak right now. The August 24th session, it had volume of 538,000. It doesn't really stick out as a big high volume bar. I'd have to say 719.74 ought to hold as a decent support area, and that is in ticker symbol AZO. Let's see what else is moving here. Crack into the downside. Follow Fossil Group. How about this one? FOSL. I hope nobody is a holder of Fossil Group because today you just simply got the tar and feathers kicked out of you. Gapping down, volume already today of 15 million shares. We have to put this on a longer term time frame chart out here. Let's go see what this says. Oof. So Fossil Group is going to come all the way back down to the 2009 lows. How about that? Fossil Group right now trading at 33.28, very likely targeting about the $11 area out here. We don't have to worry about those profiles. We just turn them off so we don't see a bunch of little lines going across our screen. Is there anything else that we can see? Anything that could have acted as support inside of Fossil is basically gone. So there's just simply nothing that looks good here. Nothing. Now, I wouldn't buy this either, but there's just nothing that looks good inside of ticker symbol FOSL. Also, moving to the downside here today, Nordstrom's. How about Nordstrom's? JWN down 10% out here. This is a monthly chart that we're looking at. Now, this could be coming back into a support level, and that's the month of August in 2011 that had 114 million shares. This month, you've done 45 million so far. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 133, S&P down 13, Composite off 46. We were taking a look at some of the stocks that are getting hammered out here. Nordstrom's is certainly one of them. I had a request to go take a look at Oh, I guess it was TJX. I was going back and forth with someone in the den. I was looking at TJX. I'm sorry, I was looking at Nordstrom's, not TJX for you. Let me go take a look at TJX. My apologies. So TJX, and the question was a high volume high. Let's go take a look at it. So yeah, my apology out there, Peaky. Yeah. So the question was first. There's a high volume high on the trading session from August 18th, and this is a ticker symbol TJX. The question was, will that get tested? Let's also look at it on a weekly basis. Let's see if on a weekly basis it's a high volume high on a weekly basis. And when you typically markets don't end on the high volume high type bars, and on a weekly basis, it also stands out as a 29 million shares out there. Big shooting star on the weekly candle. So, that's a significant area of resistance. Now, it doesn't help a whole lot that this thing has gapped down the way that it did today and the volume that's inside it. So far, you've got 6 million shares out here. And on that weekly chart, it looks to me like where this is headed to, you've got a little hammer candle out here from the week of April 27, 2015. So if it breaks below that low, which is 63.66, then price probably comes all the way by. My eyes would be on the swing points back here in July of 2014 at about $52. Let's see if there's anything that shows up on our market profile. So right now today it actually says it needs to hold this low. Because it's up against the weekly. So, but because we've got that weekly profile and you got that hammer from April 27th, I really believe the key level 63.66 out there. And so that is on ticker symbol TJX. If we go take a look at what else we have. We haven't looked at anything going to the upside. Illumina, what's going on with Illumina? Were they out with numbers? Oh, they're going to join the S&P 500. Okay, so that's what's putting some juice into that. I don't know, this Penumbra Inc. I don't see any news on that. That's just really been out for a while. So it's an IPO from September 18th. But for whatever reason, that thing is moving to the upside out here. Let's just go back and take a look at those. I'll show you one thing. This is an interesting chart out here. We haven't looked at this before, but what's identified on this chart, I only have the data right now going back to 2012. People will tell you that the market breadth, which is really horrible today inside the New York Stock Exchange. I'm not so interested in horrible market breadth as for you and I take a look at excellent market breadth. And excellent market breadth is the bottom of my chart out here. It's the blue horizontal line going across my screen. And whenever you get a ratio of 6-to-1 or greater inside of the New York Stock Exchange, that means advancing issues are accelerating at 6 or more to 1 versus the declining issues. We can see that each of those, not that there hasn't been some type of pullback, but they've really led to higher price out here. And what's interesting, if you take a look at the last two that we had, one was on, let me just expand this screen out here. One was on the trading day of August 26th. August 27th. So August 24th, we move lower. August 25th, we move a little bit lower. And then on August 27th, this New York Stock Exchange, huge, just huge move to the upside as far as advancing issues. Guess what? When we broke out, when the New York Stock Exchange broke out on October 5th, the same kind of thing that's going on out here. So that September 29th low, it's really important all the way around. So, folks, have a fantastic weekend. Always great to be with you. Be safe out there. And I look forward to seeing you on magnificent, marvelous, magical Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.